Good morning, everyone. Welcome to the first panel of the Fintech Week. This panel will discuss the role of central banks in the digital economy, which has grown at tremendous speed in the last few years. The pandemic has given further momentum to this digital revolution, which is fundamentally changing the way that we live and the way that we work, including having this fully virtual Fintech conference. But the development of the digital economy is highly uneven geographically, and it's also driven by a few emerging big techs. And with the rise of Fintech and also the increasing participation of the big tech in financial services, what should be the role of central banks to hit the right balance between optimizing the benefits and managing the risks of the digital economy? And today we are very fortunate to have three very prominent central bankers with us here to share their insights on these issues. They are Mr. Yi Gang, the governor of the People's Bank of China, Mr. Klaas, the president of the Nederlandsche Bank, and also the vice chair of the Financial Stability Board, and also Mr. Agustín Carstens, the general manager of the Bank for International Settlements. And thank you all very much for joining us today. It's great to see you, and I hope you're all doing very well. And I suggest that we begin by discussing some of the macro or mega trends in the digital economy. As I mentioned earlier, the digital economy is evolving at a speed that we have not imagined before, probably driven by, for example, faster computing power, cheaper data storage, or the immense amount of data that business can track from our personal or social activities on the digital platforms. And the recent pandemic has also fast-forwarded this evolution to the future. And all of a sudden, we now all have to adapt to the so-called new normal, like what we're having now. And so I suggest that to start with, I would invite you to share with us one notable trend that you observe, whether it's brought by the pandemic or whether it's brought by the digital revolution in the recent years, and how that trend will affect us, the way that we work or the way that we live. May I start with Governor Yi, please? Governor Yi?
Oh, thank you, Eddie. It's a very important topic, and also I'm very glad to join Hong Kong Fintech Week. The trend I observe, especially during the COVID-19 pandemic, is the so-called contactless. A key feature of digital economy is contactless, which transform physical face-to-face interaction into a virtual face-to-face interaction by use technology like us right now for your Hong Kong Fintech Week. So we are in a virtual meeting, so that that is the new trend. And during the pandemic, there is fast delivery and remote work, medical consultation, and the mobile payment. All commercial activities and social activity have been conducted in a virtual manner. So that is the very distinguished trend I observe. And as the respond to this contactless trend, our financial institution, especially commercial banks, they adjust their strategy, and they start to have the online banking and also mobile banking and also applet for bank services, and also payment, and also bank business modality have been changed. And those commercial banks using big data, artificial intelligence, and also DLT to manage financial service in this new world. And this gave us some challenge for the central bank. And for central bank, how they see so commercial activity, social activity become contactless as a result that a financial institution and the commercial bank convert their services into online business, mobile business, also in contactless manner, so that for the central bank, we have to figure out the convenience for our consumers, as well as the risk, and how to make the financial service more safe. This is we have to think about. Thank you.
Thank you, Governor Yi. Surely the contactless trend is pushing the financial services into getting more digital, and I'm sure you're right in pointing out that we have to balance the benefits and the risks. May I turn to you now, Agustín, about this notable trend?
Thank you very much, Eddie, and I join Yigang in thanking you for this kind invitation. Looking colleagues, it's great to be in this panel with Klaas and with Yigang, with you, Eddie. And well, of course, we're very excited about your FinTech festival. In terms of the precise question, I will dwell deeper into one of the premises you used to motivate the question, which is the explosion of data and the availability of data. I think that that's a trend that has been present already for some years, but I think this trend has been accelerated with the pandemic. So the two things have come up together. And for me, what really is mind-boggling is a huge amount of data that is out there from just data for any of us. I mean, I think that with the progress, but also with the pandemic, we have become more dependent on e-commerce, more dependent even of what we're doing today, having a virtual meeting, where I'm sure that there is data about it. Of course, I want to echo what Yigang mentioned about the telemedicine. It's another very important trend that is showing up. Now, of course, this is a huge gold mine in a way to be exploited. In a sense, all this data can be used for many different purposes. Of course, one is to know the behavior of people better. In a way, also to assess the capacities of firms and of persons better. And it lends itself to something that, for example, we could not imagine in the past. We have done research here at the BIS, where based on information, we can assess the creditworthiness of individuals to the point where solid data can become a substitute for a collateral. There are many other applications that the mining of data can give in terms of breaking asymmetric information and basically expanding financial services across the society. Now, of course, it doesn't come without problems. Some issues have arisen. For example, the monopolies in information. Another aspect would be, of course, the sensibility of people of how their information is being used. But by and large, I think that this technological development is defining a new era, and I think by and large is for the good. I hope that we can steer this process of data explosion to the benefit of all societies in the future. Thank you.
Thank you very much, Agustín. And I agree very much with you that data will be vital in thinking about the next stage of fintech development. This is actually what the HKMA has been centering on in our next phase of work. Klaas, over to you, the major trend that you see.
Thank you, Eddie, and thanks for having me. And congratulations to Hong Kong and all its fintech activities, because I do think that Hong Kong is truly a paragon of technological innovation. This is part of the world where things are happening, so I feel very honored to participate in this virtual panel. I would say that what I've observed in the fallout of the pandemic is that technology has actually been something of a circuit breaker. A circuit breaker to dampen the impact of the pandemic on economic activity. After the pandemic, undoubtedly, there will be a lot of academic research dedicated to the question what sort of explains the different extents to which countries have been hit by the pandemic. And it wouldn't surprise me that next to structural factors like dependence on tourism, etc., that also technological capabilities, internet penetration, the presence of broadband access to digitalization, etc., would have been important factors to cushion the blow and therefore also explain some of the cross-country variations in the amount of impact. Now, of course, there is a flip side to digitalization, and that is that the operational risks also increase. I'm sure we've all experienced that on a personal level as well, the loss of VPN connections, spotty Wi-Fi, and the infamous mute button in virtual meetings. But also, I think at the systemic level, operational risks are increasing, for instance, through increased reliance on third-party providers, an issue that I think the FSB has also been quite alert to. And then a second, if I may, development, it's a little bit more below the surface, but also I think that digitalization is changing our established notions of trust. Whole generations are growing up, my kids, for instance, that have never seen a bank from the inside and that may never see a bank from the inside in their entire life. Now, when I used to enter into a bank, what I saw was these thick plates of marble, these huge pillars that were all meant to impress me and to sort of communicate solidity and robustness. Those communication devices are no longer available when the only relationship with your bank is either an app on your phone or a URL link in your sort of web application. So how do you communicate trust in an environment like this? Also, with traditional banks, they always complain about regulation and supervision, but I think secretly, they also use that as a sort of communication of trust. They are supervised, they are regulated, so they're safe. Well, how do we sort of communicate that in a digital world? That, to me, is also still a question that we will have to come to an answer to.
Thank you very much, Klaas. I'm certainly one of those who always got problem with the mute button, and I will work on it. And apart from the three trends that our speakers have mentioned, the contactless trend, the importance of data, the change of trust in banks, there's actually one other change that I've observed, which is if you look at the 10 largest companies in the world, currently 7 out of 10 of them are tech companies. Compared with just 2, some 10 years ago, it's been a big change. And for sure, these technology companies and the technology that they bring, it does bring a lot of benefits to the society, but it also brings with it new risks and challenges, especially when some big techs are starting to enter the financial services industry. Some are already performing payment or virtual banking services role. Some are already providing essential financial infrastructure like cloud computing or data management services. So let me turn to you, Agustín, first. With the continued expansion of these big tech companies, some are already thinking that they are already too big to fail. And what do you think will be the risk that the big tech will bring to the financial services industry? And how should central banks react to these risks?
Yes, thank you very much. I think this is a very relevant question. I think what is really important to put into the table in this debate is they should not only the fact that, for example, big techs now have a very big footprint, but I think what is really remarkable is the speed at which they have arrived there. I mean, this, of course, is a completely new revolution. If we think of the Industrial Revolution, it took probably a century to really hit hard on the structure of the economies. This is happening just in a matter of years. We have moved from big techs being too small to care. In a few years, they moved to being too large to ignore. And now we're at the point that they're too big to fail. I think as many different aspects where networks are important, the core of networks should be public goods and should be extremely resilient. And we are, in a way, running the risk that a lot of these key aspects of networks are private and they are not subject to the same requirements of resiliency, privacy, and so on as other important public good key components of networks. So I think that for me is one of the biggest challenges. If a lot of or important aspects of, for example, your payment system or your trade bureaus or information provision depends on private enterprises with lack of regulation or sufficient regulation, you are exposing yourself to very important vulnerabilities. Another important aspect is precisely how the interaction takes place between the two different business models. I mean, banking, for example, has been out there for centuries, and through all these centuries, we have been accumulating huge amounts of regulation precisely to protect the service and to protect society. Now you have this huge explosive innovation that by and large in a very few years have gone by far faster than what regulation and supervisory capacity can run. Therefore, this disparity, I think it's important because not only it might generate a circumstance where a circumstance where the services and the activities done under big tech are going the wrong way, but in addition, you are undermining those that are solid, which is, the incumbents. So we need to be aware of where public intervention is essential. What the PBOC did recently, last 18 months or so, of requiring 100% reserve requirements in some of the payment systems in China, I think it's a very good example of how public policy should be implemented to assure resiliency and to provide a level playing field. Thank you.
Thank you, Agustín. Surely financial regulation and public policy has to catch up with the developments in the financial sector. And let's continue in the discussion of these issues and turn to Klaas. Klaas, I've seen some research saying that Netherlands actually has the highest percentage of consumer fintech adoption in Europe. And with the increased competition from both the big tech that we just talked about or the fintech startups, what is the overall strategy of DNB to keep the healthy development of the overall financial ecosystem? And also, being in your role as the Vice Chair of the Financial Stability Board, what do you think is the more notable trend or development that can pose potential financial stability problem or implication to the global financial system? Klaas, please.
Thank you. Like in many other countries in the Netherlands, we see innovations by both the incumbents, but also by newcomers. But very often, I would also add through partnerships. We have one important example that is very popular in the Netherlands. It's the so-called Tikkie app. It is an app for going Dutch. So if you've been to a restaurant with a couple of friends, one person has picked up the bill, but already on your way back, the person will be sending through this app an invitation for the others to take care of their part of the bill. It's also very popular with my kids, for instance, because it allows them to live up to what I call the DPE principle, the principle daddy pays everything. And it's these kind of small sort of retail-oriented apps that are quite popular. And these introductions take place with tech companies that either are very small, but some of them are also very big. Some of them try to address the whole payment chain. Others just take a small slice out of that payment chain. So far, I would say this has been an evolution that has been more gradual rather than abrupt. So we are, from our responsibility at the bank, closely monitoring how the ecosystem develops. And we also try to interact with it through our innovation hub, through our regulatory sandbox. And also, as a prudential supervisor, we of course realize that we're part of that ecosystem. So we also ourselves try to digitize the supervisory system as much as we can. Now, the question is whether the entry of big tech into this ecosystem will lead to more abrupt changes. And I think Agustín already highlighted some of these potential benefits and risks that this can bring to financial stability. It has also been an area which has been very high on the list of attention of the Financial Stability Board. No less than 4 papers have been issued recently on this specific issue. Recently, a paper on big tech in emerging market and development economies, which, for instance, shows that big tech can very quickly create a foothold there that allows them to foster financial inclusion, give access to finance to people that otherwise would not have access, and from there onward expand their range of financial services. But also here, of course, there are certain risks. Look, for instance, at the successful introduction of global stablecoins, which we have also monitored quite closely. It would have a potential reach and a use across multiple jurisdictions that could easily become systemically important. And therefore ensuring that appropriate regulatory approach within jurisdictions and also international will be quite important. Now, to that extent, from the FSB side last week, we issued 10 high-level recommendations to address these regulatory and supervisory challenges to stablecoins. And they state, for instance, that global stablecoins are expected to adhere to all applicable regulatory standards before they are allowed to commence operation, and also to adapt to newly emerging regulatory requirements as necessary. And within the FSB, the authorities also agreed on the need to apply supervisory and oversight capabilities and practices under the principle, same business, same risk, same rules. In some jurisdictions, that will imply that global stablecoins may not fit within the existing regulatory and supervisory frameworks. But in that case, then it's clear that existing regulatory and supervisory frameworks may need clarification. They may need adjustment or even new regulations.
Thank you very much, Klaas. Let me now turn to Governor Yi. China is very well known for being an early and fast adopter of fintech innovation, especially in the mobile payments area. Now, we talked a little about the risks earlier by Agustín and Klaas, but Klaas also mentioned the benefits. So in the context of China, how is digitalization helping Chinese enterprises lower their costs or raise their efficiency? And how does financial or fintech innovation improve financial inclusion or even combat poverty in some of the less developed provinces in China? What's your experience, Governor Yi?
Yes, in China, fintech and the big tech companies can help to reduce cost, to improve efficiency. For example, the big tech companies, they have a lot of competition with the traditional banking system, which give a nudge to the financial institution to keep up with innovation and therefore to improve financial efficiency. I think the big tech companies, they are competing with the commercial bank, as Agustín and Klaas correctly pointed out. And they are very capable. And also, they don't need to establish a lot of branches. And also, they have innovated a lot of new product, new technology, and combine their financial services and the selling of the financial products to their consumers. Well, they have very sticky to the customer. Customer use their payment and also have their wealth management and also have their banking services and so on and so forth. So that the financial industry, especially commercial bank, find that the big tech companies, they have more capability to find customers. And also they have more capacity to management of risk. I think that two aspect is, you see, for the commercial bank, most important is where is your potential customer, especially the high-end customer for liability side and asset side. And also, once you have your customer, how you manage the risk. In this two very important aspect, the fintech company and the big tech company, they have a lot of advantage over the traditional banks. Because of this, they really improved our financial services, especially financial inclusion in the remote area. And also for the service in the past, we couldn't imagine. Now the financial services is available, such as microloans, and also such as the mobile payment for the rural area, and so on and so forth. So that is a tremendous improvement. And also the technology that the big tech company have changed the rule of game. For example, the QR code, which is gaining popularity in China, allow the merchant to accept a digital payment via smartphone. There is no need to purchase a payment machine such as POS machine and so on and so forth. So that we have to look at this efficiency gain, especially in the financial inclusion aspect. That is a positive side. But at the same time, if the traditional banking system, they have so many branches and also they existing for years, whereas if the in the new game, commercial bank, how to survive, how to use the new technology and to obtain the customer, as well as to manage the risk. One alternative for commercial bank, also it's a phenomenon appear in China, is that they try to cooperate with the big tech companies. For example, they use the big tech companies' service to analyze the data, to find the customer, and they have a joint venture with the big tech company, provide funding to the potential business. And also, right now, there is some trend that they depend the big tech company for the risk management. So that those are the new phenomenon we have to notice. Thank you.
Thank you very much. That's very interesting. So it's not really always competition that we're looking at between the new tech companies and the traditional banks, but there could be areas of collaboration that can bring the broader good to the public. We just talked about mobile payments in China, and if there's one area that has really gained traction during the pandemic, in our view, is digital payments. Because in Hong Kong, the amount of digital payments increased by some 30-40% during the pandemic period. And I think the same experience elsewhere. And with this change in the payment behavior, we are seeing more discussions among the central bank community about the issuance of the general purpose central bank digital currency. Maybe I'll start with Klaas on how you think about this thing. Because in Netherlands, I understand that you've already got a very popular online payment system called Ideal, which is amazingly currently already processing more than 17 million payments each month. And if you've already got such a reliable and secure and well-established payment system in place, what's your thought about further, on top of that, further introducing a general purpose digital euro within the Eurozone? What's your thought on that, Klaas?
Thank you, Eddie. It's good to keep in mind where we are coming from in the Netherlands. Indeed, this Ideal has been available since 2005, when it was developed in a joint effort by the Dutch banks to facilitate debit card payments at the point of sale, because the banks wanted to offer an alternative to credit card payments online, which was seen to be too costly, dominated by US firms, and there was a certain desire to have an alternative to that. And in sort of extension of this Ideal, the Dutch banks have also been quite active in terms of instant payments, which has been introduced last year, which has made sure that the sort of transaction time for an online payment transaction has now been reduced to less than 5 seconds. So just to sketch the landscape, that this has been sort of the sector responding to changes in society and different approaches. It's also good to keep in mind that the Netherlands has been at the forefront of the countries where the use of cash has been declining dramatically. So cash is almost halving every 5 to 10 years or so. And I believe that now less than 20-30% or so of all payments is still in cash. It's going down quite significantly. And that, of course, then brings the question to the table. If you let sort of cash gradually move out of your society, do you only accept private money for payments like these debit card schemes? Or is there also a case to be made that citizens should continue to have access to the central bank balance sheet directly through the introduction of central bank digital currency? And that is one of the reasons why we have opted for a positive attitude toward CBDC. Its introduction, we believe, could promote the smooth functioning of the payment system even further. It could serve, for instance, as a backup to payments made in private money, considering that we have become increasingly dependent on digital forms of money in a rapidly digitizing payment system. And a case in point is the fact that due to the pandemic, many retailers actually asked their customers to refrain from using cash, meaning they effectively only wanted to accept private money. But we're not blind to the risks that CBDC can also bring. In times of financial crisis, it could, of course, accelerate a bank run as citizens and firms try to avoid risks by converting balances they hold with commercial banks into CBDC. Accordingly, it is crucial that measures are taken to control the quantity of CBDC in circulation, because I don't think central banks should want to take over financial intermediation from the commercial banks. We have nothing to do in credit origination, for instance. That's a commercial bank tasks, and banks, of course, will continue to need funding to apply these tasks. Now, we are part of the euro area, and that means that all such initiatives should be taken in the European context. And we are quite happy to see that also the ECB has published its report on central bank digital currency a month ago. It's ultimately the euro system that has to decide on the introduction of CBDC. But I think there are areas within the euro system where cash is declining more rapidly than in others. And in such an area like in the Netherlands, we can be at the forefront of, let's say, the experiments that have to be taken. We want to be ready for it. We want to have made the preparations, have thought through all the possible complications, so that if a decision is taken to introduce it, that we can introduce it without undue delay.
Thank you, Klaas, for it's a very, very clear exposition of the case for CBDC and also the risks that we should look out for. And turning to Governor Yi, we just talked about the very strong mobile payment culture in China now. And in fact, the digital payments apps are very much integrated into consumer lifestyle through, you just use one app and then you can buy everything that you want and pay on the app. But more recently, we also read from the newspaper that the digital RMB program has been piloted in a number of Chinese cities. Can you tell us a bit more about the scheme and what benefits you believe that the scheme will bring to the people? Governor Yi, please.
Oh, thank you. CBDC in China, we call it eCNY. The eCNY is the digital version of renminbi issued by the People's Bank of China under the premises of two-tier operation. Two-tier operation, M0 substitution, and controllable anonymity. We have complete the architecture design and also standard formulation, R&D, and also starting joint testing of eCNY in China in 4 cities, and also in the future will be in the Winter Olympic sign. And I think the two-tier operation means that the eCNY is issued by the People's Bank of China, but we use the commercial bank as well as the big tech companies as the provider of the eCNY. And also M0 substitution means that it's replace cash. It's a supplement of cash. I think for a long time, I see we would have cash as well as central bank digital currency coexisting in the future. And controllable anonymity means that you see we basically it's like a cash, but in the case of something like anti-money laundering or anti-terrorist finance, we can have some leverage. I think so far the experiment and the pilot program has been fairly smoothly. We already have something like over 12,000 cases has been implemented under the pilot program, meaning the scenario that you can use digital currency in those 4 cities. And also we already have over 4 million transactions in the pilot program, and the amount is over 2 billion renminbi. So that we can have the new technology such as QR code, as well as the tap and go technology. But overall, I think we are still in the early stage of the CBDC pilot program. And also we need fairly complicated and fairly complete legal framework and the regulation, and especially emphasizing on the transparency of the scheme. And in this regard, I think Agustín representing the BIS authority and Klaas representing FSB, and I would like to cooperate with BIS and FSB International Central Bank Community to discuss the legal framework and the transparency and how to safeguard the central bank digital currency we consider. And in the future, I think the central bank community will have a coordinated effort in the design and pilot make the CBDC a very gradual and stability of the financial industry in the future.
Thank you very much, Governor Yi. The ECNY project is definitely one of the first CBDC projects that is running into a real pilot, and we all look forward to following the progress of the project. And Agustín, Governor Yi just mentioned about the need for central bank collaboration in some of these digital innovation. So can you share with us a bit about BI's plan in coordinating the central bank's efforts in delivering some of these public goods in terms of financial innovation, especially in the areas of payments and more particularly in the area of CBDC?
Yes, of course. Thank you very much. Its own name tells all. Central bank digital currency. Central bank is of course are involved. This is a natural evolution, I would say. We start from the point of view that one of the greatest inventions in humanity has been the creation of fiat currency. The natural evolution is to provide that fiat currency in a technologically more adequate way. I think cash has been a great invention. If you sit down and think about what is behind the simple exchange of a piece of paper, what it implies that property of major things can be exchanged, that you are sure about the value of that piece of paper. Just to replicate that in a technological way is an extreme challenge. And in that way, I pay tribute to what the PBOC has done, because actually what their guiding principle has been precisely to replicate digitally what you can achieve today through paper currency. Now, of course, society now demands a better representation of money. I think by and large, central banks have responded really well by providing, I would say, hybrid solutions, not in the sense that the GIGAN mentioned looking forward, but in the sense of projects like Ideal that Klaas mentioned. Today, payments to a vast majority, over 99.9% of payments, electronic payments, are done under the rails of where eventually the central bank is involved. So I think that the fact that we have been innovating, the proof it is there. The central banks have been innovating. We haven't made a big splash like Bitcoin, like Libra, like big tech, but we are there. The fact that payments depend today on central bank rails is again the most important tribute to that. Now, thinking about the future, yes, I think that there is a lot of scope for central banks to learn from each other's experience. At the end of the day, as Klaas mentioned, you know, these are national or regional decisions that need to be taken institutionally with full political support from their own constituencies. But from a technical point of view, there is a lot to be learned from mutual experiences, not only in the technological field, but also, as Gigan mentioned, in the legal establishment of them, in the institutional provision, and even in other aspects of a central bank, like, for example, how would this affect the transmission mechanism of monetary policy? The BIS is set to facilitate collaboration and cooperation among central banks. We have our meetings here in Basel, but another very important aspect is the step that the BIS took to establish the innovation hubs, one of which is co-host with the HKMA, and that basically is to make broadly available knowledge that can be acquired in different parts of the world in terms of public goods relevant for central banking. And one of it are the different aspects of CBDCs. We're working on them. like the application of DLT technology, discussions like tokenized CBDC or account-based CBDC. I mean, so there are many, many different aspects. So what we are trying to do through those innovation hubs is to develop very deep knowledge of different aspects of aspects that are involved in the whole chain of producing CBDC in an open way that can in a way maximize the knowledge we have in the central bank community about all these aspects that can also be broadly applicable independently of the jurisdiction. Thank you.
Thank you very much, Agustín. I think time is about running out, but before we close, I would like to ask you all a quick question. Many people are saying that central bankers are born warriors, and many assume that we do not really sleep well at night, which I don't agree. But I want to ask you, in the area related to fintech, if there's one thing that keeps you awake at night, what is it? May I start with Governor Yi?
Thank you. I think if I say one thing, that is consumer privacy protection and also firms' commercial secret protection. And we have to thinking and regulate the usage of the consumer private information for commercial purposes. I think that is a big challenge that worries me. Thank you.
Thank you, Governor Yi. Agustín, what's your take?
Cyber resiliency. As we depend more and more on systems, the issue of cyber resiliency is important. It's not only cyber security from the point of view of being able to defend or against hackers or malware, but also is a dependency on, let's say, the electricity grid and about other aspects that can come in the way of facilitating a smooth application of an implementation of technology. We just cannot take for granted, the availability and the satisfaction of the requirement for these systems to work smoothly. And I think that we need to keep our degree of alertness high and to invest a lot on cyber resiliency, because this is a field where we cannot afford mistakes or accidents. I mean, it's an area where we need to assure that payment and other applications of technology is 100% proof. Thank you.
Thank you. And Klaas, over to you. You have the last word.
Well, first of all, I would say that the privilege of being kept awake at night should be reserved for private matters and not professional matters. But if I then have to mention one professional issue, I would agree with Agustín that a global cyber crisis would be a serious risk, and particularly the potential scale and speed at which such an event could unfold. We normally tend to think much like the global financial crisis, the COVID crisis, these kinds of catastrophic events as tail risks. And then we assume that there is a normal distribution where the likelihood of such tail risks occurring is not extremely high. But, these tails may actually be much fatter than we think, with a much higher likelihood of occurring. And on top of that, the impact of a global cyber crisis in an interconnected world would also be very, very significant. So that, I think, is worrisome. But to end on a positive note, it is also an area that is very much under scrutiny. And cyber resilience is a top priority for financial firms. It's a top priority for the international central banking and regulatory community. It's not only about preventing, it's also about resilience, meaning that you can sort of address and mitigate the event as quickly as possible once it occurs. A lot of work is underway, and we continue to be vigilant here.
Thank you very much, Klaas. And with that, I think we will wrap up this panel session. We have a very rich and fruitful discussion, and I'm sure that all our audience, virtual audience, including tech companies and finance companies, innovators, entrepreneurs, they will all appreciate the very insightful comments and thoughts that you have made during the panel discussion. And on behalf of all our virtual audience, I will ask my colleagues here to join me in giving you a big round of applause as our appreciation. Thank you very much.
Thank you.
All right. Thank you very much.
You're welcome.
Goodbye and stay well. Thank you for joining us today. Bye-bye.
The same. Bye-bye.
All right.
Bye-bye. Stay well.